Hello and welcome to another update video about Sand. Sand seems to be moving now in this third wave after it hit two of our support areas here. The wave 2 probably completed here on the 22nd, 21st of November. With the dip into our support area, it spent 2 days in our support box, and the price action makes it possible now to add even an impulsive price channel here. So I've added that. Might give us some clues about where some of these subwaves that I've now put onto the chart as a roadmap, where they might find a top. The wave 1 of the larger degree third wave typically would find a top in the region between the 61.8 to the 78.6 extension, so between 50.3 and 55 cents. I'm definitely going to watch for a top there in circle wave 1, but that doesn't mean a top has to show. Okay, so if we see a break above 55 cents, then I would assume that something happens that also happened on the Rune chart, on the Solana chart, possibly now on the ADA chart, but that's way too early to say, on the Matic chart, that we basically get this very aggressive extension higher. And that is something that also Bitcoin might be doing right now, okay? So it's that 78.6 extension. Typically what we do is we measure the length of the main wave 1, go to the low of the wave 2, and then we say, okay, the main pivot, decision point is the 78.6 extension. If it goes above that, it indicates that a more aggressive rally can unfold. Yeah, or, I mean, that's always a bearish alternative I have to have on the chart. It would be, one second. It would be A, B, C, okay? That's also possible. I mean, the clearest pattern is a nice and solid 1-2, 1-2 setup. But sometimes when we are in a third wave, like here in the main third wave rally, in the melt up phase, in that main element of a third wave rally, which is usually the most aggressive wave and the FOMO wave, that's typically the wave in which you want to be positioned already. So it doesn't necessarily matter if a deeper wave 2 shows. You typically use the 1-2 setups provided when they show. They don't show very often. When they show, they should be used if you want to find an entry. Because the third wave, it is typically in crypto, if it's a real third wave, and you get that FOMO feeling everywhere, then it's typically not the best time to find an entry point, I rarely have FOMO because I typically, when I want to be positioned in a coin, I typically use the 1-2 setup. And if I miss it, I miss it. Then it's fine, but then I missed it. And that's just not part of my plan to enter in a third wave rally. Because otherwise it's too stressful. Otherwise, I can't, trading. I like a very relaxed way of trading. Trading is one of the most stressful jobs in the world. You can make it stressful, but you can also make it very relaxed and, chillax a way of trading, where you just sort of use the deep pullbacks when they show, and if they don't show, they don't show. Have a core position in the coins that you want to be involved in, and you just let it run. So just basically risk management then. But yeah, again, because I often see that people ask, when can I enter? Well, so the boxes are on the chart, so you can always measure your risk against these. But that one is now basically completed because we've broken above the wave 1 high. So it's possible that we're now in the third wave. It's not entirely confirmed yet because I don't call that a sustained break yet. But if it continues to push, which at the moment it seems to do, it seems like we are in that third. The microstructure is, again, not very clear here. So I avoid any further microstructure. It could be that this here is again a leading diagonal in wave 1, but you can't trust these. And so I don't want to provide another micro count here because it's just going even smaller doesn't make sense. It will just be invalidated, guarantee, if I give you a micro count here. So just look at the levels, and what is a key support level to watch now? Well, I would use the 78.6 extension level here, which is at 38.6 cents, which means that if we see a break below that, it indicates that wave 2 is still in the making. How come? Because so far, this rally is just in 3 waves, and it could just be that this was an A wave, overshooting B wave, and we come down in wave C once more. That's possible, okay? Let's just That's just something we need to be prepared for. And the only way to really know that would be a break below 38.5 cents, in my opinion. But that's my update about Sand. So first of all, target before we finish. Target for that third wave here, this third wave. Hard to say really, but minimum I'd like to see, should add that level. Minimum I'd like to see the 70 cent level, but that feels a bit shallow for a third. So it's more like the 1.38 extension at 75 cents, maybe even 85. So it's basically the range between 69 to 85 cents that would be ideal, even though the 69 cent level would be very shallow, a bit too shallow to be reliable. So I'm looking more at 75 to 85 cents for this third wave. Can always extend a bit higher, but that's why we track micro support once the microstructure becomes a bit clearer. That's my update about Sand. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. Thanks a lot for watching. Bye-bye.